I want to ask you a question nobody in the financial world ever asks. What is the return on your debt? Rather than what is the return on your investment? What is your return in the market? Right now, somewhere in your financial life, money is leaving your family every single month on schedule. Guaranteed, certain, gone. Most high earners I talk to can tell me exactly what the return on investment was last year or even last month, but no one's ever calculated what they're paying to carry their debt. And that number is the most important number in your financial life right now. And in the next 30 minutes, you're going to see exactly why and a real case study of how someone recaptured a high guaranteed amount of money that was leaving their life consistently, persistently every month. I want to ask you a question that nobody in the financial world ever asks. What is your return on debt? Rather than what is your return on investment? How much are you making on the investment? What's your return in the market? Like, how are your investments going? Right now, somewhere in your financial life, money is leaving your family every single month on a schedule. Guaranteed, certain, and gone. And most high-income earners, and that's anyone making over $40,000 a year, by the way. It puts you in the top 3% in the world. But I can tell, or I talk to tell me exactly what their investment and the return on their investment was last year, or what they want it to be. No one's ever, not one of them have ever calculated what are they paying to carry their debt. And that number is more important, or maybe the most important number in your financial life right now. In the next 30 minutes, you're going to see exactly why. You're going to see the tale of two choices and exactly why the return on your debt is the most important number in your life. Let's start with the doctor I spoke with recently. He's making $274,000 a year. Decades into practice serving the folks of his community. He's right down here in Florida. He retired, and then he went back to work. He's 69 years old, and he just signed up for 5 more years. Why? Because he's working to eliminate high interest debt that he's paying to other people. He's working to make sure that his life after 74 isn't a repeat of the patterns in the life he's had up until this point. He gets $4,000 a month from Social Security, and his wife gets Social Security as well, and that covers most of their bills. But what they shared with me is that they want more. They want more time freedom. They want more travel. They don't want an elaborate life, but they want more. So what did he have to do? He went back to work. And during our conversation, here's a statement that stopped me cold. He plays the lottery. And the lottery for him is a plan, not a wish. And I just thought, that's odd. Isn't that odd? Because after a lifetime of chasing the right investment, hoping something would finally hit, a lottery ticket is the strategy he has left. Again, this is a doctor, one of the smartest, well-spoken, disciplined, kind, high-earning people I've spoke with this year. And the pattern got him anyway. He spent his whole career measuring his return on investment. He shared he had real estate deals that didn't go the way he thought, multifamilies, other investments, joint ventures. But nobody taught him to measure the return on his debt. So I want to ask you, everyone listening, if the next 10 years go exactly like the last 10, what does your financial life look like 10 years from now? And later, I'm going to show you Jeff, right? Remember, tale of two paths. Jeff's 49, strong income, strong assets, strong habits, and a financial foundation that most people would envy. I would say 1% of everyone I spoke with has a foundation like Jeff. And I'm going to show you one number that Jeff never calculated and why, after we saw this and implemented a change in his pattern, why we had to spend more than an hour going through every detail before he would move. And within 30 days of moving, everything changed. So stay with me as I talk about these two examples. Here's what the financial world taught us. Go out, trade time for money, find a good investment, get a strong return, put your money to work. We all know that we are destined to work forever unless our money goes and makes us money. One of our favorite authors and leaders in the wealth thinking space, Robert Kiyosaki, told an entire generation that savers are losers. So we became investors. We take whatever is left after the bills after our lifestyle, and we go find somewhere to put it. An Acorn account, a crypto, stock market, real estate, gold and silver, joint ventures, day trading, anything with a return on investment. Think about water cooler talk at your place of employment or your own business. It's about what are you invested in? Where can you have your money work? We all understand that if we want true time freedom, which is the most valuable asset, that our money has to work for us. And underneath all of that activity is one feeling driving every decision. I need more than I have. I need a bigger return. I want money to do more for me. I need something to hit because if I don't, I know I'll have to work forever. And here's what nobody told you to look at while you were busy finding better investments. The money leaving your family every month in debt payments. Again, it's guaranteed, it's on schedule. Think about if you were receiving those debt payments. If you are paying them, and it doesn't matter if the market's up or down, whether the investment is a hit or miss, right? Whether it's money leaving you or being received by someone else, it's almost like a return on their investment, isn't it? They've invested in you. So let's talk about, or go back and talk more about Jeff. Again, he's 49, married, kids. He's a construction and land developer. He's a contractor, and he does very well. Has a very good business, does over $500,000 a year, like $580,000 a year. His income that he keeps is around $200,000 a year. His wife gets to stay home with their two boys that are 6 and 8. And he has, like I said, all the assets. He's got a solo 401k. He's got a money market, gold and silver, crypto, stocks, dividend paying stocks, 24 emergency fund, $24,000 in a savings account, 529 for the boys, HSA account. And here's one of the slides I'm going to show you. He's got $4,380 a month leaving his family every single month on debt that has interest. When you times that times 12, that means he's got $52,560 a year leaving. That's certain, guaranteed, gone forever. And while he's out taking savings and looking for an investment that's going to pay him around 10 to 12%. And again, here's the math that nobody does this math. You cannot out invest a leak in your financial bucket that's that big. You can't out invest it. The average rate of interest paid across all of Jeff's debt was 8.44%. 8.44%. It ranges from 4.74% on solar panels all the way up to 22.49% on Amex. And some people here and some people listening, you have way higher amounts of debt going out. And so show me an investment that gives you a guaranteed, certain, risk-free, tax-free 8.44% return on your money. It doesn't exist. Fixed annuities right now, one of the higher rates that they've been paying out guaranteed in a while, doesn't even touch that number. And the return on eliminating that debt is guaranteed, immediate, risk-free, and it never goes down. And so for all of you, do you know exactly how much is leaving your family every month in debt interest? Not the payment, in the interest, like the percentage that's leaving every single month. And look at this. This is Jeff's actual payoff comparisons. No strategy, right? Doing what the banks want us to do. 205 months. He won't be out of debt until 2043. $76,441 of interest walking out the door to somebody else. Consistent, persistent, being paid out over the next 17 years. If you're finding this content valuable, go ahead and subscribe to the channel, smash the like button, and ring the bell because it'll change colors for you. And that's going to help this message reach more people like you who need to know about this. So smash, like, subscribe, and let's get back to it and show you the numbers. And if you look at the right column, now this is a multiple story illustration here that I'm showing you because first it was 24 months when we just used Jeff's. Now you see his debt payoff plan is down to 18 months. He'll still pay $25,659 of interest, but he recaptures 33%, or a little bit over 33%. He recaptures $50,781. It's going to now stay in his family. When he plays honest banker and pays himself back, he's got over $285,000 in cash value, and his death benefit is over $3.591 million, protecting his family, his business, and the things that he loves from day one. Same income, same debt, same $4,380 payment. One change: where his money lived first. So Jeff didn't just save money on the interest. He actually paid for the ability to keep earning money while recapturing the same money. And when we look at the chart there, he creates a $285,000 asset while eliminating $200,000 of debt that he currently has. He eliminates it 11 times faster. Who here wants something that can go like hyper speed their road to control and certainty of their financial situation? That's a number that no one's calculating when they're looking for a better return. And so here's a belief that keeps high earners stuck. If I find the right investment with the right return, I'm going to finally get ahead. Or if I make a lot more money, I'm going to finally get ahead. Every investment you chase carries risk. Everything has a trade-off. The market goes down. The deal falls apart. The interest you were receiving stops. The crypto drops. And I've been through this. Like, the real estate sits empty. Joint ventures stop paying. Your debt payments do not care. They leave on a schedule regardless of what your investments do. So when you're taking on risk trying to earn more, then you're guaranteed to lose every single month. So Jeff had that problem with $1 million in assets behind him. The doctor at 69 had that problem with decades of earnings behind him. The treadmill, the system that most people are playing in, not most of you, but most people are still playing in this other system. The treadmill doesn't care how hard you run on it or how fast you're running. You know, Ernst Young did an independent study showing how people should have between 10 and 30% of their assets in whole life. And we're not talking specially engineered whole life that we're always talking about, but that's 10 to 30% as part of a sound financial foundation. Jeff had almost every other asset class you can name, zero of that one. The foundation is what makes everything else survivable when something doesn't go the way you planned it. So if your best investment dropped 30% tomorrow, what is the foundation under it? And what will that hold? What does that look like if everything you're invested in just stops, dries up, or drops tomorrow? So before you reach for the next return or go out and learn about the next thing you can invest in, calculate the return already sitting inside your debt. The return on your debt is the most guaranteed, certain, risk-free return available to you right now. You know, eliminating 8.44% interest in debt is a guaranteed 8.44% return on every dollar you redirect towards it. There's no market risk, no timing required, no hoping that something hits. It's immediate, it's certain, it's yours. As long as you can do the things and do one step at a time, it's certain it will happen if you work the system. And guess what? We're running the same math on our old student loans, Patty and I. We discovered this week. Over the next 20 years, we're going to pay over $49,000, $49,534 of interest on our existing MBA loans. I thought we were completely out of debt. And I found that when I got closer to our money. So when you combine the system, right, the properly built family banking system, that shifts something that no investment can replicate. You stop the bleeding, simultaneously building a foundation. You recapture the cash flow that was flowing out and leaving your family every month. And you redirect that cash flow into a system that grows, protects, and stays accessible. And the wealthiest families in this country have been paying themselves first at least 38% since the early 1900s. The average savings rate today, this month, as this is being shot, is less than 4%. That gap is the foundation problem, and it is solvable. When we start looking at the return of interest on our existing debts, this is where the family banking system does something that no investment can replicate. Again, it grows at a contractual guaranteed tax-free rate. It stays accessible without penalty or permission. It creates an immediate legacy. I know everyone here and listening is family focused or community focused. It never goes to zero when the market drops. It only gets better every single day. And it's been doing this longer than the IRS has existed, longer than the Federal Reserve has existed. And when you use it to eliminate high interest debt first, you create a guaranteed return. You capture the cash flow. I always talk about building, keeping, and multiplying. This is the keeping part. And you redirect that cash flow into a system that compounds forever. So it's $1 doing multiple jobs at the same time. And when we talk about exactly what that looked like for Jeff, he started by funding his policy monthly, and he overfunded it by $60,000. So he did $63,119 a month. And when I showed Jeff his return on his debt, he became interested. He first was going to use it for house projects and other things, but when he saw that when he stopped the bleeding, he started getting curious, but he was also very cautious. Remember, this is someone that's really diverse and doing well with all of his assets. And so he's someone that's going to really dig into this and understand every single detail. So once he was approved, it was one of the longest approval calls that I've ever had. We went through every question, every number, every scenario. What's worst case scenarios? What's the best case scenario? Every inner working. What does this mean? What do the loads mean? Every scenario. And especially, again, especially the worst case. What happens when this? What happens when my business stops? What happens when my income stops? And we made sure over that next hour, it was an hour and change, that everything was comfortable for him. Everything, he was satisfied. And then he moved. He repositioned money that he had out of savings. Now the money market, he had a bonus of a deal that just came in. And so within the first day or first 30 days, here's another slide probably worth sharing. What I hear a lot is when Jeff repositioned his money out of savings, out of the money market, and he was ready to get this started. He was nervous that it wasn't going to work the way we teach, that the money wasn't going to be available in the first 30 days. And if you look at the slide, right, he puts in $63,119. And within the first 30 days, he takes a $55,539.24 loan. It's the exact number. I went and checked to see exactly how much he was able to access in the first 30 days. Sit with that for a second. On his terms, in a moment, if you're a business owner, it was available immediately. He didn't do anything. He just moved where that money was. And now all that money keeps growing as if nothing ever happened. And that moment gave Jeff the certainty. That was his aha moment. He got it before, but he didn't quite believe, because there's the mindset and there's the money part of it. And there's a problem we're solving. Jeff understood that this was a better move, a better asset, but he didn't know if it would work the way that we taught and the way I teach. The moment that this happened, he sent me a super excited message, email actually, and he wanted to start his wife's policy immediately. The next day after he took a loan for his first contract. Remember, I spent an hour and 15 minutes reviewing the contract with him. The first moment that he was able to access that much liquidity and start paying off that debt, to go from having 17 years of debt to 18 months, he was fired up. And now he's protected for himself. He wants to protect his wife. He's moving to the next stage of thinking. And again, when we added his wife's policy and we went from 24 months of eliminating all the debt to 17. And as I showed earlier, he went from 17 years to 18 months. It's 11 times faster. And the interest that he saved over that life is over $50,000 that keeps in his family forever. And so that's why I want you to think about, like when Patty and I saw we have another $49,000 leaving our family over the next 20 years, if nothing changes with the way we're treating it, how much interest is going to leave your family over the next decade or next 20 years if nothing shifts? And all Jeff did is change where his money went first. And so some of you have been in the community for months. You understand the concept. You have the numbers in your head, and you haven't built it yet. And here's what waiting actually costs. Every month you're carrying 22.4% on your Amex is money that's gone forever. Every month that your savings sits earning nothing and giving you no compounding that you'll ever get back. And when you use it, you interrupt it. That's another month you lose. Every month the foundation's not there, there's another month that your family's not protected. Jeff was really cautious. Heck, he was really worried that this was too good to be true. Again, we spent hours together going through every detail. before he signed and funded and made his banking system real. And the month he stopped being cautious and had faith and moved forward is now how he has the foundation. But the time we took to get him across, the month that he waited, is another month that he'll never get back in compounding. Now, it's only a month, you might say, but it's still a month. So I'm encouraging you to be thorough, ask every question, understand every detail, and have faith that in yourself that this foundation is what it takes to move, to take action, to pick a date and go. Because every month that is not built is another $4,380 leaving his family on a schedule. So for all of you, how many months have you understood this? Have you understood the cost or the return on your debt and still let that number keep leaving? And remember, the doc that I talked to this week, right? There's two paths. As always, there's two paths you can take. And I'm okay with whatever path you take. And you can reach me two ways. You can either scan the QR code or you can message me directly on my cell number, which is at 407-928-5488. Jeff scanned the code, had the call with me, and within 30 days, he's eliminating his debt rapidly and having his money do multiple jobs. And he's going to eliminate over $200,000 of debt in 18 months. The doctor at 69 still hasn't made the call. He actually canceled his call for the Saturday. He's still trying to decide if this is a good fit or not, while he maybe goes out and buys another lottery ticket. I don't know. Maybe that's the play. And the gap between Jeff and the doctor is not intelligence. It's not income. It's not discipline. It's one conversation. It's a combination of mindset, money, and solving a problem. That's it. One conversation. So scan the QR code, take the call. Your number, your plan is waiting. Right now, you're at a crossroads, and you have two ways you can reach me. You can either scan the QR code or click the link down below and schedule your call. Jeff scanned it, and within 30 days, $55,539.24 hit his account in the form of a loan. He's going to eliminate over $200,000 of debt in the next 18 months rather than 17 years. And Jeff, he's already called back to expand his system, his family banking system. While the doctor at 69 hasn't made the call. He's still deciding if this is a good fit, whether he buys another lottery ticket or he starts his path. The gap between Jeff and the doctor is not intelligence. It is not income. It is not discipline. It's one conversation in implementing a system by making one change. Scan the code, make the call, your number, your system, your personal plan is waiting for you. So until then, I'll see you in this next video. If you're enjoying the content, make sure you're subscribing to the channel, liking the content, smashing those buttons to help other people find this to be valuable in their life. So again, I'll see you in this next video. Until next time, be blessed. I'll see you soon.